Putra. He's a tax consultant. Welcome, Kak. Okay, so and today's moderator will be David Faustino Salim. Without further ado, to make to make the time more effective, we're going to call the director of ALSA LCUGM, Gaudi Aferdi, to make his opening remarks for this third webinar. Gaudi, you may have the floor.
Am I audible?
Yes, you're audible.
Okay, thank you. Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya. Distinguished and honorable speakers, Mas Adrianto Dwi Nugroho and Mas Agung Ramaputra, and even Faustino Salim, a student at Faculty of Law, Universitas Gadjah Mada, as our moderator today. And ladies and gentlemen, firstly, I would like to express my gratitude to God for the grace and mercy that has been given to us, which led us being where we are at the moment. And I would also like to give my gratitude to Talita and ALSA LCUGM's other English development local boards who created this event. Had it not been their dedication and commitment, none of this could ever be realized. So ALSA LCUGM webinar is a program where we try to provide our members and guests with updated legal issues with the platform of a web seminar accompanied with well-known services taxes. Should your Netflix be subjected to tax? Where I think that this is a very interesting topic due to the rising usage of digital services for the past few months, making these digital service companies earn larger amounts of sales, which this led to several countries starting to rethink whether or not there should be or should not be a digital services tax to these digital services, including Netflix. We hope that this topic could help us discover various eye-opener facts and knowledges such as the tax regulations, which cover digital services companies, and even maybe the comparison between digital services taxes regulations between Indonesia and maybe other countries who has the same or similar regulations. I hope this webinar can serve as a key platform in learning and gaining knowledges during these adjusting times, and that this will be considered as a proof that we will always be able to gain knowledges and experiences no matter the obstacles that we face. And to conclude, thank you for your attention and participation, and I hope that all of you will enjoy this program today. Wassalamualaikum warahmatullahi wabarakatuh. Shalom, Om Santi 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 Om, Namo Buddhaya. Align for excellence, ALSA. Oh.
Thank you very much for the opening remarks, Gaudi Aferdi. Next, without further ado, to maximize the time that we have, I will call upon our moderator today, David Faustino Salim, to lead the discussion. And we hope that the discussion will be a very fruitful one, and we all will be enlightened by the speakers today. David, you may have the floor.
All right. Thank you so much, Talita. And good afternoon, everyone. Please welcome to another series of ALSA webinar, where today we want to talk about digital services tax. And today we are accompanied by two amazing panelists. They are Mr. Adrianto Dwi Nugroho and Mr. Ramaputra. We're really happy to have you today. So today's topic, it is about digital services tax, where this approach is currently adopted by many states to save their national economy amidst the pandemic situation. So our discussion today will be firstly given by Mr. Adrianto Dwi Nugroho, and then we'll also have a Q&A session. And after that first session, we will be continued by a session by Mr. Ramaputra, and then we'll also have another Q&A session. Without further ado, please welcome Mr. Adrianto Dwi Nugroho. He is a lecturer at the Department of Tax Law in Universitas Gadjah Mada. And he also received his bachelor degree in LLB in UGM, and his LLM International Tax Law degree in Leiden University. And he recently also received a Doctor of Law degree in University of Helsinki. Besides of that, he is also active in publications and recently has published The Salad Days of EU Digital Services Tax in Indonesian Comparative Law Review. So I will invite you, Mr. Andrianto Dwi Nugroho, to share his insights with us. Good afternoon, Mr. Andrianto Dwi Nugroho.
Good afternoon, Davin. You can call me Adrianto.
All right. So, Mr. Andrianto, how are you amidst the pandemic situation? Are you healthy?
Thankfully, I am, yeah. And hopefully everyone is healthy as well.
Yes, thank you so much. So how about we start the first session with your insights regarding the digital services tax? And
Sure.
Yeah, please have your time, Mr. Dwi.
Yeah, so first of all, thank you for Gaudi, Talita, and all members of ALSA LC-UGM, and thank you, Davin, for the introduction. Very glad to contribute to ALSA LC-UGM. Of course, during my days at UGM, I was also a member of ALSA, but it was almost like 20 or 15 years ago. So when I was given the term of reference, the theme of the webinar is should Netflix be legally subject to tax? So I'm not really in the position to answer that because that would mean that I would take sides one way or another. So I'll try to be as neutral as possible in discussing the issue today. So my presentation is titled Recent Developments on Digital Services Tax. First slide, please. Yeah, so maybe I can give a little bit of contextual background. So back in 2013, the Organization for Economic Cooperation and Development, or the OECD, was mandated by the G20. Well, actually, the mandate was before that, when they also mandated the exchange of information cooperation, but then the BEPS project came afterwards. So they launched the BEPS action plan. It consists of 15 action plan. So the idea was at that time that the OECD member states and countries in general are experiencing losses of revenue, which they suspect are caused by the actions of taxpayers, either by tax avoidance or tax evasion. So the idea is to gather all members of the OECD and other states as well to make a global project that would make sure that taxpayers are taxed fairly and that states are able to tax taxpayers when they are supposed to tax, meaning that the project aims to reduce the space for tax avoidance and tax evasion, and that would require commitments of many states, if not all states in the world. So one of the action plan of the BEPS project was addressing tax challenges of the digital economy. So if in the introduction by Gaudi said that the importance of digital services. No, please stay in the first slide. It was he said that the importance is just during the pandemic. Well, the idea of taxing digital economy is already being discussed back in 2013, and in 2015 they formulated a final report. You can Google that on the OECD website. And simply put, the idea was there had been difficulties in applying international tax rules onto the digital economy due to the lack of nexus. Now, in order to understand nexus, then you have to revisit the resident source principle in income tax. I hope you already, or maybe some of you already take the tax law course, and you might be familiar with the resident source principle in income tax. Basically, well, in simple terms, basically in income tax, one country can tax a person who is domiciled in its territory, or they can also tax people not residing in their territory if that person is receiving income from that country. So now the idea was that the existing international tax rules, which is the tax treaty, so in tax treaty, it is not possible to tax profits of multinational or foreign enterprise if there is not a permanent establishment located and operating in that country. So it was only applicable to brick and mortar businesses, meaning that there must be a physical presence of the foreign enterprise in one state in order for that state to be able to tax the income of the multinational. So, of course, this is a challenge. This is a problem in the digital economy because if you see streaming services, online marketplace, and also over-the-top services, you don't have to be present. For example, if there is a US company delivering these digital services to the Indonesian market, they don't have to establish even a representative office to be able to collect profits from the Indonesian market. So this was seen by many governments as unfair taxation, because then from the government point of view, you have people that are paying taxes compliantly because they are generating profits in that country, but you also have persons from another country receiving income from your country, but you're not being able to tax that income. So that was the idea of the whole project. And of course, this final report in 2015 was already being developed or being refined twice in 2018 and lastly in 2019. So if you read the final report in 2015, then you already might have some old concepts of the taxing the digital economy. So you must read the latest document on that, because there might be a major changes in the approaches. Next slide, please. Can I have next slides, please? Yeah, thank you. And of course, another contextual background is that these digital companies or digital services corporations are actually accruing a large amount of money. And if you compare from 2013 to 2020, there are many companies that gained a significant increase in their revenues. And of course, during the pandemic also, where everybody else is actually experiencing difficulties in their cash flows, digital companies actually are could be said as increasing their revenue, because people start to use their services more frequently and more broadly, meaning that more people are using their services. So from the government point of view, this is a potential revenue. And imagine if you are a market country, probably like Indonesia, and you see a company that is accruing billions of dollars, and maybe part of it are accrued from your country, and you're not being able to tax that money, then not only that you will lose revenue, but then you will also create an environment where some persons are paying compliantly and the other are not paying tax at all. So these data are taken from statista.com. You can recheck it as well. Next slide, please. Now, why are we taxing digital services? So this is more a political issue. So if you see the OECD reports, one of the reasons why they are taxing digital services is that they want to ensure that large and highly profitable multinational enterprises, including digital companies, they pay tax wherever they have significant consumer-facing activities and generate their profits. So this is a very significant change, because earlier, or from the 1960s, when the tax treaty were introduced, they were not even thinking about giving the source country a taxing right. So let me give you a little bit of background. So the tax treaty is trying to avoid double taxation, meaning that in one country, if he receives income from another country, if they have to pay taxes in accordance with domestic tax law of two states, then they will carry a heavy burden, probably more than 50%. So that was not considered healthy. So they introduced a tax treaty saying that, okay, we're going to divide the taxing right between these two states so that the tax burden for the taxpayers are kept at a fair level. So so in the past they were not really preparing about the transformation and the emergence of digital economy. Even when you trace back in 2002, there were already discussion on earlier discussion or a very late discussion on tax. The subject of discussion of the whole project. So you see that, of course, why are we taxing digital services now, and why is this issue important now? Is of course because the capitalization and the accrual of income is very large, and that states want to take some part of the cakes of these emerging industry. So if you see, it is quite personal, yeah. So if you see, of course, usually tax policy, why are you taxing this? Because you want to finance your budget, you want to create a fair taxation, you want to make sure that people pay a fair share of tax. But if you see why the OECD want to tax the digital services companies, it's quite personal. So they want to tax large and highly profitable multinational enterprises, and this is why also maybe the US is a bit of resistance on the issue, because they have large companies operating in many countries, and they are delivering digital services. So when the OECD said they want to tax highly and profitable multinational enterprises, it is as if the OECD wants to tax the US companies. So that's why they are a bit reluctant in discussing about the issue. In fact, about 2 months ago, they are pulling out of the discussion, and that would probably cause a delay in reaching the consensus, which is scheduled to be at the end of 2020. Now, that also happens in the European Union. They tax digital services. They have some reasons, but one of them is to fight against aggressive tax planning and close the gaps that currently exist in the international rules, which makes it possible for some digital companies to escape taxation. So again, this is quite political and personal to the digital companies. So they are no longer discussing about fair taxation. They are no discussing about financing the budgets or anything, but it's simply because they think that it's not fair that someone is generating large amount of profits in your territory, but they cannot be taxed at all according to the current international tax rules. So that's why this proposal, whether it is the OECD proposal or the EU, it's more a political one, and it's more personal to the large companies. So yeah, that's the situation. Next slides, please. Now, what services to tax? In the earlier documents by the OECD in 2015, they discuss a wide range of services that can be taxed by digital services tax, including e-commerce, whether business to business or business to consumer, and payment services, app stores, online advertising, cloud computing, high frequency trading, participative network platforms, or user created content like YouTube and maybe TikTok. But in the latest proposal, or in the 2018 proposal, they actually have grouped the types of services that they want to tax using the digital services tax that includes online marketplace and then online advertising. So there are developments with regards to what services to tax as well from the OECD document. Next slide, please. And also in the EU, it's more specific. So from the earlier proposal, this is the proposal that is now being discussed and hasn't been decided yet because they are still waiting for the consensus reached at the OECD level. So usually, after the OECD make an instrument, a legal instrument, then the EU will try to adopt it into their legal system. So, but they have idea also on what services to tax. And first of all is the placing on a digital interface of advertising. So this is online advertising like Google AdSense and so on. And then the making available of users of a multi-sided digital interface, which allows user to find other users and to interact with them, and which may also facilitate the provision of underlying supplies of goods or services directly between users. So this is like Amazon and so on. And then the transmission of data collected about users and generated from users' activities on digital interfaces. This is like Facebook. So you see in the EU, they focused more on the value creation terminology. So if you see some EU scholars write about the digital services tax, their main topic is about the terminology of value creation. So this is a term, well, in general, they say that profits should be taxed in the place where the companies are generating their value the most. And in this case, for example, if Facebook have 20 million users in Germany, then that 20 million users are considered as value that can somehow be taxed. But of course, there are some kind of formula to tax the 20 million users. How do you tax 20 million users? How do you convert 20 million users into a tax object? That is the challenge there. But their focus is on value creation. So that's why. Well, of course, at the end of the day, if you look through the proposal, it's almost the same proposal as the OECD. In general, they want to change or to add a new nexus that. So in the past, when I said that profits are only taxable in the country of residence, so example, in the past or still in the time right now, Facebook profits are only taxable in the US unless Facebook has a physical presence or permanent establishment in the other country, for example, in Germany or in Indonesia. Otherwise, if they don't have a permanent establishment whatsoever, then all the profits goes back to the US. So that's why also why the US are a bit reluctant, because that concerns the amount of taxable income that they can tax from these companies. So if now the market countries say, okay, now we're gonna have to change that. We cannot rely on the physical presence of permanent establishment concepts anymore. So we're gonna expand the terminology of permanent establishment as to include a new nexus called significant economic presence. You can call it value creation. So they are really trying to right now they are trying to formulate a justification, a conceptual justification for market countries to actually being able to tax these profits. And of course, if you see the statistics before, then you can see that the longer that they are not able to tax these profits, the larger the loss of revenue they can have. So really, they want to have it right now. So that's the problem. They have to reach the consensus in 2020. Next slide, please. Oops, you missed one slide. there is one slide before that. Now, next slide. Next slide. Next slide. Yeah, this one. That one. The one before. Unilateral versus multilateral. One slide before, please. Yeah. Okay. So this is the conditions right now. So the OECD said that any consensus on the digital services tax must be reached by the end of 2020. But the conditions right now, of course, the pandemic also affect the way that countries develop this proposal, because maybe all countries are now focusing on tackling the COVID-19 instead of discussing about digital services tax. But the idea is the earlier you have a consensus base, then the earlier that states can have justifications on taxing these profits. But on the other hand, before that consensus is reached, now some countries are already making a jump start, meaning that they do not want to wait for the multilateral consensus to be reached. For example, even in the EU, there are some states that are already applying the digital services tax, like Austria, like Italy. They already implement the digital services tax for at least 1 year now or two. So yeah, now the backside or the drawback of a unilateral situation is that when states are introducing their own threshold, their own tax rates, their own tax collection mechanism in order to tax these digital services, then you have condition where, for example, if Facebook has to deal with 20 different tax regimes on how they can fulfill their tax obligations in those countries they are operating, then that would increase a high compliance cost. For example, if the threshold in Indonesia is 12 million users, whereas maybe in the EU you have a threshold of 60 million users or 60,000 users, I forgot. But my saying is that there are times when you have to see whether you are already fulfilled the threshold or you haven't fulfilled the threshold, and then you have to deal with the calculations, and then you have to deal with the paperwork and so on. That would increase the compliance cost of the taxpayer. So that's why a multilateral solution is needed, so that everybody will apply a common tax regime on this digital services tax. Next slide, please. Yeah, and in the case of Indonesia now, they are imposing the value-added tax. Now, bear in mind that the current VAT is different than all the discussions on digital services tax. So if you see the OECD proposal, you can say that the VAT is only a temporary solution, so that states can actually generate revenue from these activities, from activities of streaming services and so on. But if you remember the concept of VAT, VAT is a indirect tax, meaning that actually it is the end consumer that is paying or bearing the economic burden of the tax. So if now Indonesia is imposing VAT, they are not really targeting the profits of these large companies, but rather they are trying to gather information, and they are trying, let's say, you can say that this is a pilot project before any direct tax that targets the profits is being implemented. For example, if now these companies are already being obligated with paperwork, and they can make let's say they can make a compliance or true reports on how many users they have in Indonesia, and how many how much VAT they are charging from their customers and being distributed to states to Indonesian government, then the Indonesian government will later have this database. So they can see that, okay, Netflix now has 20 million users. So in the future, when they are implementing the direct tax, when they are actually targeting the profits of Netflix, then they will have this database, and Netflix cannot hide anymore. Okay, so from your previous VAT report, you have 20 million users. So now I'm collecting digital services tax on profits that you generate from these 20 million users. So that's the idea of imposing the VAT right now. And of course, if you read the newspaper, the collection of the VAT actually has triggered the U.S. Trade Representative investigation because they see this VAT as a starting point for a future digital services tax in Indonesia, and of course the U.S. is not really a big fan of digital service tax applied in another country for the reasons I have explained before. And if you see the 6 VAT agents that the Directorate General of Taxes have appointed, now there is 16 actually, but this was the list when I make the slides, and you see like from 6 of these agents, 5 of them are actually established in the US. Only Spotify is established outside the US in Sweden. So yeah, you see how the US can see this as a personal, as the world is making war against them in terms of digital services tax, because they are targeting these companies. Next slide, please. Okay, yeah, as I said before, the obstacles with respect to that, yeah, from a taxpayer point of view, that would create a difficulties and high compliance costs. And for a government, from the government, it is also, it can be said that it is not a very efficient system if you oblige, let's say, if you oblige Netflix to collect the VAT. Because if you, let's say, if you pay 50,000 for your Netflix subscription, then you only are liable for 5,000 of taxes. And imagine for each 5,000 rupiah that Netflix collects from you, they have to do paperwork, and then the government also have to they have to do the audit on this paperworks. And of course, there is a high volume of low value transactions. So you will have, like, I don't know, maybe 10 million paper of invoice consisting of 5,000 rupiah of revenue. So from a government point of view, it could result in an inefficient system, tax system. So maybe I can sense that the government is not really going for the revenue right now, but they are really targeting the database and about how many users are these companies have in Indonesia. So that's the valuable thing that the government can have from imposing the VAT, because in terms of revenue, I don't think it's really significant. Let's say if you have 5,000 rupiah of Netflix, and then you have 10. Let's say if you have 10 million users, then you would only collect like 50 billion maybe. That's not really significant for a revenue purposes. Next slide, please. Okay, what's next for Indonesia? Okay, you have to review again the Minister of Finance Regulation 48 of 2020 on the collection of the VAT. And then you have to review the long-term policy of digital services. And the quick question being that, will Indonesia be forever a market jurisdiction, or will it promote the emergence of domestic large digital corporations? Because that could determine how Indonesia should formulate or to create its policy. So if if they are going to promote, for example, 1,000 or 5,000 digital corporations that would have markets in Southeast Asia or in Europe, then they have to have the perspective that we will be the residence country of these corporations, and we don't want these corporations be taxed in the market country. So that is if Indonesia has projected the emergence of domestic digital companies. But if, let's say, they don't have that programs, if they say that, okay, we will invite all digital companies from US or from any other countries, we have a large market, so operate or please provide services in our country, and we're going to tax your profits there, then probably the market-based tax is a good solution. So at this point, this is a momentum for the government to determine whether Indonesia will be a forever market jurisdiction or they will start to be a home of the Silicon Valley companies, quote unquote. And lastly, they must put hold any plan to impose direct tax. They have to wait for the consensus-based solution. And if you remember, after the issuance of the USTR notice, the government actually make a reply, because the USTR notice actually asks governments mentioned in the notice to give feedback on during their investigation, and the Indonesian government said no, we're not imposing the digital services tax, we're just imposing the VAT. Whereas you know that this is not true, because the government regulation in lieu of the law number 1 of 2020 clearly states that in terms of digital services, they will apply 2 types of taxes, the VAT as a starting point, and then they will apply the digital services tax. So at the moment, the Indonesian government cannot really say that we are not going to apply the digital services tax because the regulations and the collection of the ATO have already shown the intention of the Indonesian government to target these companies. So we'll see what happens in the next few months. Okay, that will be my presentation. Thank you for paying attention.
All right, thank you so much, Mr. Andrianto. So it is really fantastic for us to learn that about the future of digital services tax in Indonesia, about the long-term plan, and also the international perspective in regards to this matter. So I will quickly move on to Mr. Ramaputra. So Mr. Ramaputra is currently a tax consultant. He is a tax consultant in the Ernst & Young Indonesia, and he earned his bachelor degree in Universitas Gadjah Mada, and he earned his master's degree in Mahidol University. And please, I will invite Mr. Ramaputra. Good afternoon, Mr. Ramaputra.
Good afternoon, Devin. Thank you for
really
the introduction.
To have you here. And before we're going to Mr. Ramaputra, I would like to remind for you who have any questions, please drop your questions in the chat box below here, and we will answer the questions right after Mr. Ramaputra give his insights in regards to the digital services tax. So without further ado, please have your time, Mr. Rama, and please give us more understanding about the topic at hand.
Okay, thank you, Devin. Good afternoon, everyone. Before I start, I want to thank ALSA LC first for giving me the time to present about the technical, probably practical applications for the digital VAT in Indonesia. And I want to thank Talita and Gaudi, Devin, and also for creating this event. And also I want to thank Pak Andrianto for a very insightful material. Yes, I guess it's going to be very, very helpful for me as well. Because maybe in the future we'll have a lot of advice from incoming companies who wants to do digital business in Indonesia. And I think by seeing the whole picture, I guess it makes a whole lot of sense. Okay. The title of my presentation is Indonesia's Digital VAT, and what is it and how it affects you. Next slide, please. So today we're going to talk about the first one is the previous tax law context, and we're going to see the timeline of how this tax would come to fruition before the legislation as well. And then we're going to see the technicalities, how it is it eligible for digital companies to be VATable in Indonesia? And then I think we're going to briefly talk about the compliance process. And just like Pak Adrianto said, the compliance process will take a lot of time, a lot of documents, a lot of invoice as well. And then we're going to talk about the key points for taxpayers and the end consumers. What will it be for us? Will it be for the end consumers who pay the VAT, and what will it be for the digital companies who will have the obligation to collect and report the VATs? And we're going to briefly talk about the implementation progress of the digital VAT in Indonesia, and just briefly talk about the sanctions and dispute possibilities that may arise from this digital tax. Next. So the VAT on the use of digital products from abroad, let's say intangible goods or digital services, has been long regulated before in the VAT law. So I took this from the press release of the DGT. So it was actually regulated in the law, the VAT law, for intangible goods and digital services that's come from foreign taxpayers should be imposed with VAT. So, but because back then usually the companies who do that, so let's say company A is using the service of Amazon cloud services from let's say from 2015, 2016, they will actually issue a VAT, but it's self-assessed VAT. And it is also regulated in the Ministry of Finance regulation as well, that is derived from that law, is that even individuals who actually utilize and consume the goods, intangible goods and digital services from offshore, they have to actually do the self-assessed VAT, because every transaction that is from the tax object, the VAT-able goods and services in Indonesia has to be imposed with VAT. But then again, the digital companies, they grow very rapidly. Netflix, Spotify, Facebook, Instagram. I think it's very hard for governments to catch up with them and trying to make a regulation that actually adapts well with them. So in the end, Netflix, Spotify, they do business in Indonesia. Millions of transactions has been done here. And I guess because it is still actually obligated to pay the VAT. So in other words, the government then chose the foreign taxpayers like Netflix and Spotify to just collect all of them. Rather than putting the obligations on us, the end consumers, to pay the VAT and report it as well, they put it on the business side. So okay, and they're going to report it to the government. And the second one, probably this VAT is also the part of the government's effort to create equality in business, so to level the playing fields for all business parties, well, especially domestic parties and abroad, especially between conventional and digital business, because I think they want to level the playing field in terms of payments. So it will make them look like not just digital companies that they don't pay taxes. Still, every taxpayer needs to pay them. Next. So the regulation basis, on the 31st of March, Perpu number 1, 2020 was issued in midst of the pandemic, and that sets out the VAT obligations for digital goods and services. Before, in 2019, there was also a law that actually precedes this law, but it was passed as a law then by the representatives. And on June 5, and then the Minister of Finance Regulation 48 then declares and provides details on appointment of VAT collectors for electronic transactions, and then it was issued and came into force in 1st of July 2020. And then the following of that, on 25th of June, the Director General of Tax issued an implementation regulation, and that is the DGT Regulation 12. So for the VAT collection of digital transactions, this regulation provides details of the details. For the VAT obligation set out in Perpu number 1, 2020, which has been passed as the law by House of Representatives in Law number 2, 2020. Now the details of appointments and VAT obligation have been set out, and the last DGT regulation. So the Director General of Tax can start appointing PMSE business as VAT collectors. And that proceeds to the appointment of those 6 first foreign taxpayers to be obligated to report the VAT. Next. So, as regulated under the Minister of Finance Regulation number 48, the Director General of Tax Regulation number 12 stipulate that VAT, value-added tax, is imposed on the utilization of taxable goods and taxable services from outside the customs area in the customs area through electronic system or PMSE. And the VAT must be collected, paid, and reported by foreign sellers, foreign service providers, foreign providers of electronic system used for trading activities, or Indonesian PMSE. Well, we're going to collectively call it PMSE business. They're appointed as VAT collectors by Director General of Tax. So in the end, the companies was appointed, just like what Pak Adrianto said, they don't pay the taxes. They only collect the VAT. So their compliance cost will focus on compliance and documents and stuff. Next. Now, how do we know that those companies are eligible? How do you know that Google is eligible? How do you know that Netflix is eligible? Well, they're big, yes, but are they actually, can they be appointed? Now, the Director General of Tax may appoint a PMSE business, if it meets a certain criteria. So when a company meets a certain criteria, and then the DGT can actually appoint them and give out a decree, they will come to force at the beginning of the month of the following issuance. Now, it's pretty low, if I may say. So a PMSE business can be appointed as a VAT collector if it meets one of the following criteria. So it could be either of them. So the first one is it's total transaction value with buyers in Indonesia exceeds, sorry, I need to see that, 600 million in a year or 50 million in a month. I guess Netflix, Spotify, Google, Facebook, they exceeds everything. And or its website traffic or access in Indonesia exceeds 12,000 in a year or 1,000 in a month. And I guess we have like more than 1 million users, I guess. So almost every digital business that is running in Indonesia is eligible for that. So the Director General of Tax will give a VAT collector a tax identity number in the form of registration letter, be used as its identity in fulfilling its tax rights and obligation. I know it's been an argument as well. Is this a tax ID or NPWP or not? I guess it's a different number that is given by the DGT for special foreign taxpayer, because if they're given the local tax ID number, it will be the consensus of the global thing would really not come into fruition, because like it was the discussion, should they have a PE, a permanent establishment in Indonesia or not? And currently, with the regulation that they only have to collect and report the VAT, I don't think they really need Indonesian tax ID just yet. Next. So, and I guess this has been a circling predictions as well, and it was a lot of questions from people as well. So, what will be taxed? I mean, the things that we buy daily, what will it taxed? So the first one is the goods. Now, according to the regulations, digital goods are any intangible items in the form of electronic or digital information that includes goods which are the result of a conversion or embodiment or goods originally are electronic, including but not limited to software, multimedia, and or electronic data. So it could be, games. It could be music that's sold, and let's say we used to have iTunes, but I don't think you can buy music anymore in iTunes. Films, I guess, when we buy films or when we rent films, ebooks. If you guys like to read in Kindle and stuff, so. But I guess the biggest thing that probably people won't notice is games. So people who now plays in PlayStation, PSN, or in Steam, I don't know when they will appoint those entities, but probably if they do appoint them, we'll start paying a lot more for online games. And I guess it's a big blow for Indonesian market because I think the market here is pretty big. And the second one is the digital service. Now, digital service are services sent via the internet or electronic network, are automated or involve little human intervention, and are not possible to confirm in its absence information technology, including but not limited on software-based service. So this service, it's a point of argue as well. How do we actually define a digital service? I think almost everything is done digital right now, right? You contact someone from the internet, you want them done something, let's say you want a poster, you want a video, or you even want to make a presentation, so you contact someone from the internet, but is it called digital service? So in the regulations, advertisings, usually you don't really talk with people or Google, you just and if you pay, and the last thing that they probably have for human intervention is probably the review for the ads that it is. Other than that, to reviewing the ads themselves. So, and then there goes like proofreading as well. So like if you know Grammarly, proofreading applications. So you pay some amount to automatically get better proofreadings, so they can actually create an essay that is good. It is digital service like that, and a lot of let's say Amazon Cloud Services, Azure, all will probably be digital text. Next. Now, I'm going to talk about a bit about the customers when the payments are made. Now, the customer is defined as an individual or an entity that utilizes intangible taxable goods and or taxable services from outside the customs area and the customs area through electronic systems, including the buyers of the intangible taxable goods, the service recipient. Now, further, as stipulated under the Minister of Finance regulation, the buyers are subject to this VAT impositions are individuals or entities that meets one of the following criteria. So, and people are asking too, how do they know that we are using that here, right? I mean, what if I'm here and then I watch Netflix in Singapore, right? And then I went for an exchange program in the US, and then I'm watching Netflix there, but I'm paying in Indonesian amount. Should I be taxed, right? So the criteria for the subjects are like, one is domiciled in Indonesia, and two, it makes payment using debit or other payment facility. And the third is to enter into transactions using an IP address in Indonesia or using a phone number with an Indonesian country code. And this is meet one of the following criteria, so it could be or. So probably most people will be the subject of this VAT. Next. Like the usual VAT returns that companies do every month. So the digital VAT also have like a periods of VAT returns. I know it's similar to that. So a VAT collector is required to submit a report on the collected and paid VAT. Now the report must be prepared on a quarterly basis and it must be submitted at the end of the month, after the third month of the quarter. So there's 4 quarters, January to March, September, and October to December. Now, I guess it's worth noting that I don't know how many transactions Netflix has in Indonesia. I don't think it's disclosed, but imagine you have to pile up 3 months worth of transactions in Indonesia, right? Like how many people are subscribing, how many people maybe unsubscribe, and stuff. And that's just probably Netflix, or I think it's easier because they're just subscription based, just like Spotify. Imagine you're doing something for App Store or Google Apps or Google Play Store, right? I don't know how many transactions in Indonesia it is, but I think it's going to be a long document to submit to the government. Next. And just like the usual VAT returns, the report must contain at least the following information for each quarter: the total number of buyer, a total amount of all payments, excluding VAT, the total VAT collected, and total VAT paid. So usually in Minister of Finance regulations, they have an attachment of everything that they said here, like the report. So they have a template for that. And I think they have a sample of the decree as well. So if you guys want to see it, you can just Google the regulations, and usually they will have an attachment filled with the samples of how it could look like, the list and stuff. Next. Now, just like the usual VAT, if no VAT is collected during a quarter, they still have to require to file a nil report. Now, the question about the tax audit from the DGT, it's not yet come to fruition. I don't think I can say anything. There's no regulation about it at all, but it is said that the regulator of tax can request a detailed report on the VAT collected by a VAT collector for 1 year calendar. The detailed report must contain the number and date of proof, the total payment, total VAT collected, name and tax ID of the buyer, phone number, email address, and any other identity of the buyer and service recipient. And just like what Padente said, this will be a very, very big document, and I don't think the government is actually looking to read millions and millions of transactions and roll this transaction 1,000, or maybe this is a transition to the electronic transaction tax. Next. Now they have to pay the VAT collected to the Indonesian State Treasury, and it made funds like electronically to banks. I think this is pretty. And next. Now the key points for taxpayers and consumers. So from the compliance grounds, the PMSC business, the foreign taxpayers will report the VAT. The foreign taxpayers will collect the VAT and the end consumers, that's us, will pay the VAT. So they just added more cost to their compliance process. They not yet pay the taxes. I guess before the global consensus at the end of 2020, probably they will. I don't know if it's going to be a withholding tax or will it be a direct tax similar to corporate income tax, but I guess we'll see. And from the market grounds, so the end consumer will eventually pay for almost all digital products and services, maybe. We don't really sure, but I mean, with the regulation right now, they can actually appoint a lot of business from here. Invoice issued by the PMSE appointed by Digital now should have displayed the collected VAT. So I'm going to show you after this one of the examples that you can see. And then PMSE business or tech company will have to add expenses for tax compliance. So because mostly those entities don't have representation in Indonesia. Well, some of them have, like Google Indonesia and Facebook Indonesia, but we don't pay those services to the Indonesian entity. We paid to their LLC, or say in the US or in Sweden. So maybe they're here for like technical assistance, sales. So we don't really buy something from them. Next. Now, this is my receipt from the Google Play. And as you can see, it was July. We don't actually pay tax for their services. So the tax is 0. Uncollected revenue. Have to pay taxes a little bit, like 2,000. I don't think it's very, very big for us, because usually the ones that we pay for like services for digital stuff is not that high. But I mean, probably it's going to be a bit high for other businesses who's running this thing as well. I guess 10% premium for VAT is pretty big. Next. Yeah, and this is the first wave of appointment, right? I think Adian already covers this. And next, I'm going to talk about the second wave. Next, please. Yeah. So the second wave as a PMSE business, and then another of Amazon entity. Audible is one of the Amazon as well. Alexa as well too. Now Apple Distribution International got also the appointment. TikTok, one of the rapid app that we see right now, got appointed as well. And the Walt Disney Company, there probably is going. They're marketed for, I think, Disney Plus. I guess. I mean, that's why we see a lot of Disney Plus ads right now, because they can actually do business right here in Indonesia and pay taxes for VAT. And I think it's a good move as well to clear out the vagueness of digital taxes right now. So companies like actually Disney, which is like big companies with a lot of compliance, can actually go into Indonesia and feel a little bit confidence to do business here, even though probably in the end they will tax the digital company with direct tax as well. But I guess it's a start for a lot of companies that can actually enter Indonesian market better. Next. About sanctions or penalties or disputes, there are no sanctions or disputes or penalties that are stipulated in the previous regulations. But however, the law number 2, according to law number 2, so if a party, including a foreign PMSE, fails to fulfill its tax obligations, including an obligation to collect and pay the VAT, it will result in an administrative penalty, as stipulated under law number 6 of 1983, as lastly amended by law number 16 of 2019 on general tax provisions and procedures. So I don't know if they actually will impose the penalty, but I guess we'll see. I don't think they want to scare the taxpayers just yet. And in addition, law number 2 also mentioned that after certain warnings,
I'm sorry, Mr. Rama, can you hear me?
We're so sorry, everyone, for the technical error. So apparently, Mr. Rama's laptop got restarted. So we're gonna wait for a few minutes for it, so it can come back to life, and then we will resume the webinar. We're so sorry for the inconvenience. Thank you.
Sorry, technical issues. So yeah, the law number 2 also mentioned if after certain warnings, if the foreign taxpayers doesn't really accommodate or correspond well with the authorities, personal access may also be cut by the Minister of Communications and Informatics based on a request from Minister of Finance. The government hasn't issued the implementing regulation yet, but I think this could only happen if the foreign taxpayers are very hostile to Indonesian compliance. I mean, in digital business as well. I think it's pretty easy. In Indonesia, if it's in brick and mortar business, if you don't pay taxes, tax authorities will have to come to you. They will have to come to your office. They'll come to your house. But I think in this term, if they don't comply, I think one of the way that they can do it is this: they could just cut off the IP address, or they could cut off the DNS servers, or they could just block the website, because most of the apps are web-based, and apps are usually just like a medium to go to the websites. So, but I think this will only happen if the taxpayers are very, very hostile and are not wanting to comply at all. Next, I think this is the end of my presentations, and I'll be glad to try to answer or discuss any questions that arises from you guys. Thank you.
All right. Thank you so much, Mr. Rama. We've been really happy to see that from the practical perspective, from the implementation of digital tax services. And then right now, we're going to move on to the Q&A session. We have received 2 questions from Chandra Yusuf and Stephen Nigel. We will firstly move to the question from Chandra Yusuf. So the question is, why the global system is not fair for developing countries? Because developed countries has taken advantage of low technology in developing countries. And in that regard, why developed countries do not make payment systems such as Nostro and Fostro account, but in tax? Is it because of global trade should not be fair? Thank you so much. So this question maybe will be addressed by Mr. Andrianto firstly, and then if Mr. Rama has something to add, maybe Mr. Rama can add after Mr. Andrianto. So please, Mr. Andrianto.
Okay, thank you, Devin, and thank you, Chandra, for the question. But yeah, I'm not really competent in talking about the global trade. But maybe regarding the question, why isn't I'm not also familiar with the Nostro and Vostro system account, but I just googled it 2 minutes ago. But basically, yeah, in terms of tax collection, every state is responsible for its own budget and its own tax collection. There is a convention on mutual administrative assistance in collection of tax matters, meaning that, let's say, if an Indonesian taxpayer is having let's say, a bank account that he uses for business in a partner country, for example, I'm sure which is the partner country, but let's say in a partner country, then the tax authorities of Indonesia can ask the tax authorities of the partner country to see, using their information system, whether it is true that this Indonesian taxpayer is having a bank account that he is not reporting to the Indonesian tax authority. So that is one of the scope of the mutual administrative assistance cooperation, but it doesn't include a share in revenue, a share in a bank account for tax revenue, and so on, because I think each country has its own state budget and its own revenue collection system and its own revenue deposit system. So it doesn't involve another country. Thank you.
All right. Thank you so much, Mr. Andrianto. So now, Mr. Rama, do you have something to add?
No, I don't think I have the competence about the Vostro and Nostro as well. No, I don't really have something to add. But
all right.
Interesting question. I'll look it up later.
Thank you so much, Mr. Rama. So I think that decides the answer will be, it depends on each country. So right now, we're going to move on to the second question, which I guess will be directed to Mr. Rama. And there are two questions from Stephen Nigel. The first one, so if I own an online marketplace that sells various brands of sneakers, what kind of condition that require me to pay taxes according to Article 4, Law number 2, year 2020? And the second question is there any criminal penalty if I use a forwarder instead of a legal way that taxes me to import my business goods? All right, so please, Mr. Rama, if you mind to answer the question.
Okay. Wait. When we're talking about the law number 2 or 4, law number 2, is it law number 5 or law number 2?
That is law number 2.
Is it
Mr. Rama?
Oh, that is law number 2. All right. So they're actually asking about if the business is it digitally VTable? Is that it? Right? If I'm not wrong, I mean, just trying to, yeah, right. So if it's an online marketplace and you are located, so right now they're actually taxing the foreign taxpayers yet, but the local ones are not yet appointed. I guess it's for I don't think we want to tax the local ones yet. You know, I think it'll create an outspark in people, because I think back then the Minister of Finance once had an idea to tax like online marketplaces in Indonesia, and I don't think it actually create a pretty good buzz. But if you're an online marketplace and you sell sneakers in Indonesia, I don't think you are digitally feasible just yet. But I mean, like, according to the law, you are, but because you're not appointed yet, you should not, you will not, and you should not collect VAT. And like, you don't, I mean, like, in the end, you don't pay taxes your consumers pay taxes, and like you're the one who's going to collect and report it. And the second one, is there any criminal penalty if I use a forwarder instead of a legal way that taxing me to import my business good? So you're talking about criminal penalty. So you use a forwarder rather than an importer. Is that it? I mean, I'm not really an expert in criminal penalty, but I mean, if you import stuff, it should always go from the customs, because if not, I think there is a criminal penalty. I guess Pak Adrianto, maybe you could address this one about customs, I guess.
Okay, I'll try. So for the first question, maybe I have a different reading with Mas Agung. So according to my reading, well, it's not actually in law number 2 of 2020, but it's in the Minister of Finance Regulations 48. If you see Article 1, number 15, it says that pelaku usaha PSME, orang pribadi atau badan melakukan kegiatan usaha bidang PMSC terdiri dari pedagang luar negeri, penyedia jasa luar negeri, PPMSE luar negeri, dan atau PPMSE dalam negeri. So maybe, and if we look back, the idea of collecting the VAT, and it's you can find it in various publications of the DGT. They try to create the so-called level playing field between domestic and foreign online marketplace. So maybe we can use this Minister of Finance regulations also to tax domestic online marketplace. But of course, the primary content or the most important content of the regulations in Minister of Finance regulations, and also in law number 22, they focus more on the on foreign digital enterprises. But I think if the idea is to create a level playing field for domestic and foreign enterprise, then there should be also a collection of VAT for domestic online marketplace. Question regarding criminal penalties. Well, if I'm not mistaken, there is also a maybe last year or beginning of this year, there is another regulation saying that any importation, any, like if you buy like something from Amazon, then if you exceed, I think $3 or some threshold, then you have to pay for taxes. So I think even if you use forwarder, there will be some customs and tax obligations when it arrives in Indonesia. So and if in the case that forwarder is not paying the customs and the VAT, maybe the liability falls to the seller in Indonesia. But it depends on how strict the custom system is. But if I'm not mistaken, there is a recent regulation they are lowering the threshold for the payment of custom and VAT for goods being bought from abroad using what you call as forwarder, I think. Thank you.
All right. Thank you so much, Mr. Rama and Mr. Adrianto. So the first question's answer is that the Ministry of Finance Regulation 48 year 2020 says that you can tax domestic marketplace, but right now they don't focus on the local marketplace yet. And for the second question, if you use forwarder, you still pay tax if it fulfills the threshold, and if you not pay, the liability will fall to the seller. So I think these two questions concludes our questions and answer session today. And right now, we're going to the ending of our webinar today. So I would like to invite Mr. Adrianto and Mr. Rama to give your closing statement in regards to our webinar today. Maybe we can start first from Mr. Adrianto.
Okay, yeah. So maybe with regards to the collection of digital services tax, of course, as I said before, the longer that we wait for the regime to apply, then the higher the revenue loss that the country may suffer from. But and also from the taxpayers' point of view, the longer the consensus is reached, then the higher the risk that they will have to comply with different tax regimes, either the VAT or the DST in whichever jurisdiction they are operating. But yeah, the idea is although you want the regime to be available, but you cannot uh, uh, do it unilaterally. So you have to have a consensus because otherwise the goal of making a unified approach in collecting digital services tax will not be reached, and that taxpayers will face legal uncertainty of the digital services tax. So yeah, then so my my closing statement is we have to wait for the consensus, however it takes, however long it takes to be reached. Thank you.
All right. Thank you, Mr. Andrianto. Now we move to Mr. Rama. I'm sorry, Mr. Rama, you're still muted.
Sorry. I think the takeaway is that in the digital VAT in Indonesia is paid by the end consumers, just like any other VAT. It's just like the VAT that we usually buy for like tangible goods. And I guess when we talk about if those companies are taxed, they are not yet taxed. We're still waiting for the global consensus. And I think we should all be prepared to suddenly see a little bit of spike in our invoices. Let's say your subscriptions probably is going to have notifications of a little bit higher payments. I don't know about your subscriptions, but I mean, if you subscribe something that is a little bit like 500 or like a million per month, you're gonna have to pay a tax for like 100,000 per month. So, and I don't know if it's going to disappear or will it be not imposed anymore after the direct tax of digital transactions. But I guess from now on we can all agree that we will have to pay digital VAT in the coming months and years probably. But in the good term, maybe it's going to be easier for multinational companies or technology companies that we like the applications. They will probably have a better chance to do business in Indonesia and to actually establish a wider market here without even creating a PE. So just like back then when Netflix wasn't really a thing and Spotify wasn't really in Indonesia, we all use VPN to download them. Like it doesn't really enter Indonesia yet, but we download it for VPN. So I think we're a big market for that. And I think a lot of companies are utilizing that. And I just hope that we'll see a lot more companies from outside and also from inside, because the government is paying a lot of attention to the digital tax right now.
All right. Thank you so much, Mr. Rama and Mr. Andrianto. It's been really a pleasure for us to have you today in our discussion in the webinar, ALSA webinar series. So right now, we will end this discussion and I'm going to give my floor back to Talita. Please, Talita.
Hello again, everyone. So I would like to personally say thank you to everyone who has participated in this webinar series. Thank you also for Mas Andrianto and also Karama for the very insightful discussion regarding this topic. We will be giving out certificates for speakers as an appreciation. We're very sorry we can't give it here symbolically. We're going to send it via email very, very soon as possible. We're very sorry for all the errors and inconvenience that we have caused. Thank you for your time. It's been a pleasure for us to have you all here. The slides from the speakers will be sent to the to you all via email too. Also, thank you for all your questions. Wassalamualaikum warahmatullahi wabarakatuh. Shalom, Om Santi 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 Om. Nama budaya, salam kebajikan. Stay safe, and stay healthy, everyone. Thank you.
Thank you so much, everyone.
Thank you so much, everyone, for having me.
Thank you.
Bye-bye.
Can we please